Bitcoin has pumped out of the blue and everyone seems happy and relieved about it, yet this move is more likely the beginning of the end, a wolf in sheep's clothing that will kill all unwarranted optimism for now. Bitcoin pumped all of a sudden, but as rosy and bullish as it may look, it doesn't by any account mean it's done on the downside. Bitcoin may very well be a wolf in sheep's clothing that is trying to lull us into a false sense of security before taking us down as its prey. But before going into that, the regular stuff. Nothing in this episode is financial advice. Everything I say is for educational and entertainment purposes only. And if you appreciate this technical update on Bitcoin, on which I've spent a lot of time at figuring out what's really going on, then please return the favor by hitting the like and subscribe buttons and share this episode with others who may benefit from hearing this too. For Bitcoin sure is tricky, and it's my job to keep a straight course amidst its sudden and unforeseen turns and to avoid your feeling dizzy. Today you're in for a lot of animals and parables, but beware, for those animals are wild and cunning. How do we know whether Bitcoin is ready to continue up towards new all-time highs or whether it's still got more to go on the downside? Well, we don't, and no one does. That's not why we're here. We are simply here to determine the most likely outcomes upon any new technical data and to understand whether the market sentiment is still bullish or bearish despite sudden moves to the contrary. In this sense, Bitcoin is still in a short-term bear market, yet this 17% pump since just a day and a half ago sure speaks to the contrary. And this is exactly what we're about to distinguish in today's episode, what this pump is really about. Now, this rally confused me too at first, for I didn't expect Bitcoin to go this high, and already at 53,000 I began to subconsciously flirt with the notion that things might have turned around, that Bitcoin was now mature for a smooth ride upwards. It was one of those moments when I began to feel a bit of FOMO, and that's fine, for we all feel it. It's a psychologically collective feeling and professionals aren't spared from them either, they just don't act upon them. If I were to have been in a long position now, I'd feel pretty good, very good. But here's the thing, feeling good, or rather feeling a bit too good, a bit too certain, that's the time to raise that big red flag of ours. If Bitcoin were to stay at these levels until month's closing, it would ruin that important cooling off effect that we've been going on about for quite some time now, the one at which the monthly RSI retraces to strong yet healthy levels for continued and sustainable moves to the upside. This is equivalent to the pit stop in a Formula 1 race. Despite the fact it costs the driver precious time to refuel and change tires, not doing so will guarantee failure. Sure, the driver can skip it and instead continue driving. It will certainly pay off in the very short term, perhaps for a lap or so, but then those short-term gains will quickly take a toll on the long term. Either the driver will run out of gas or else his performance will shortly suffer due to rapidly worn down and subpar tires. Bitcoin needs to stop, refuel and change tires too before it's at all capable of proceeding towards new all-time highs and eventually at winning the entire race. If not, Bitcoin may very well move fast towards 70,000 or so, but soon thereafter the car will break down altogether and it won't even get to the finishing line. In this sense, I do not rule out the possibility of Bitcoin ignoring its pit stop. But if it does, I will not look at its tires, I will look at the entire car and expect it to set on fire. With that said, any such turn of events would be out of character for Bitcoin. And I'm confident Bitcoin is much more world-class, mature and sophisticated than to pull off some lunatic bollocks like that. In this episode, we'll focus on the most likely outcome of another downturn, as the sentiment counter to this rally is still bearish. If Bitcoin ultimately decides to ignore that pit stop, we'll deal with it as we go. Here are all the technical reasons why the bears are still in control and why they might just be pretending to sleep. Starting off on the weekly chart, we have quite a relevant observation to discuss. If this week's candle manages to break above the opening level of the previous week's big red candle, as in above $56,260, then that would be a very bullish sign, at least in the short run. One that would increase the chance of an ignore the pit stop and continue driving type of move as the one we've just discussed. But the chance of that happening is quite slim, and the reason for that is because so far this week's trading volumes are really weak, and so this rally too is backed up by weakness. In this sense, Bitcoin would pretty much need to seriously scale up its trading volumes to make a strong bullish move practically possible, for there are a lot of technical resistances right above these levels that likely won't give in unless they're pushed through with brute force, and that brute force spells volumes. Moving on to the daily chart, the price is currently testing the EMA 50, which as we can see has acted as a reliable support and resistance throughout. Over the last 4 tests, it has held up nicely. Now Bitcoin's coming in from below, and I certainly don't expect this to break on the first try, especially not at these pathetic trading volumes. For this right here is like trying to break down a solid 3-inch wooden door with a toothbrush. And of course, that's not gonna work. No, you need a sledgehammer. On the 4-hour chart, Bitcoin is closing in on the EMA 200 from below to test it as resistance. And not only that, it's currently trading right inside the red Ichimoku Kumo. But this area of resistance right here makes perfect sense. For this right here, this is where technical analysis becomes really beautiful. For if this level of resistance holds up, we are likely in for a steep rejection. And here's why. First of all, if we connect the 2 local bottoms and use those to form a parallel channel, then we can establish that its resistance perfectly coincides with the resistance cluster. Some may protest and ask why this possible formation in the making isn't a symmetrical triangle or even a descending triangle. And the reason why I disqualify this to be a possible symmetrical triangle is because a triangle doesn't start by hovering around in one end. Now, if this dump were to have bottomed or spiked out around these levels, then it would have been a completely different story. But this, no, it's just not technically viable. And the reason why I don't hold a descending triangle in the making for particularly likely is because its technical outbreak would be somewhere around mid-May. And given that Bitcoin has just broken down from a 2-month-long rising wedge, it would be highly unlikely for it to immediately proceed to another long-lasting consolidation in the midst of a markup. Besides, the technical target for such triangle would be at around $37,500, which would be very bad news for Bitcoin's markup momentum. That would be a big cause of concern to Bitcoin's strength. And as I mentioned earlier, I'm confident that Bitcoin is much more of a strong alpha than to roll over that easily. This leaves us with the descending channel, which ties it all together. My main thesis regarding the cooling off has long been that Bitcoin needs to close below $50,000 this month for its RSI to recharge enough power for a continual upwards move. But of course, this is a rough estimate, for we're not talking about 50,000 as if it were divided with laser precision. Here's what I see as a very likely outcome if or when Bitcoin were to get rejected at this cluster of resistances. First of all, it could easily bring Bitcoin down towards these levels, or even cause it to test the bottom of the channel for a 3rd time. This would then confirm the descending channel as a formation. The nice thing about this is that as long as Bitcoin gets rejected here and finds its way down below 50k, the final test of this channel could even take place in early May. This would cool off the monthly RSI and let the rest of the price development run its natural course and without any time pressure. Even if or when this channel were to be confirmed, I do not rule out a possible capitulation dump below it. A fakeout if you may. And as we already know, fakeouts tend to move violently in the other direction and would perfectly align with everything we've discussed in the previous episode about V-shaped moves below the EMA ribbons and green Ichimokus on the daily. A fresh example of such fakeout is the very recent symmetrical triangle fakeout, which shot up violently in the other direction. And as we've talked about, Bitcoin needs power, a sledgehammer, to break above all of the resistances above. And the more times it tests those resistances, the weaker they become. This is equivalent to multiple poundings as opposed to only a single blow. For even with a sledgehammer, you need a few strikes before that door comes down. But when you swing it, you also need to pull it back before you can swing at it again. And this right here is very likely one of those swings upon which the next pullback for energy and force may be the strike that slams the door open. On a final note, this resistance perfectly aligns with the all-time high resistance of Ethereum, and our theory of how it might be establishing a modestly ascending channel if it were to rapidly lose momentum and strength compared to that of Bitcoin is very much in play. This would prove that Ethereum is ready to play second violin for some time to that of Bitcoin. To the untrained eye, this rally may be a reason for rejoice, but to us who come prepared on the other hand, we will not at all be surprised when that cross-dressing wolf and the bear that pretends to be sleeping get to work and kill any gullible retail optimism. This would serve its purpose of scaring any Bitcoin enthusiast so that by the time Bitcoin reaches those anticipated $42,000 to $45,000 levels, those same emotion-ridden investors will give up in fear and despair. That was all for now. Thank you and goodbye.